Good morning, good morning, good morning, everybody. It is Tuesday, Taco Tuesday, possibly Taco Tuesday, September 12th. It's about 5:38 in the morning, East Coast time. And going to go over really quick where we came from because, again, it was September 11th yesterday. And whether you are a conspiracy theorist, believer, or not, doesn't matter. The market is going to close green. And that's what we did with a massive 22.88 point range on the SPX. Absolutely nothing. Since that low over there on August, where was it? August 18th, 43.35, and then we came down to 43.56 on the August 25th, the Friday after that. Just a couple of points, 20 points there. We have now had 1, 2, 3, 4, 5, 6 less than 30 point ranges, but call it 7 because we had that 18 point range the day after Labor Day. So, for very obvious reasons, range and volatility have been extremely compressed. And like we were talking about, there is a small window, and that window virtually ends at the end of this week. And one mistake, only take one, and we are going to be breaking down to and through those August lows. So that's what we're sitting here with. And that's what quadruple witching quarterly options expiration week will do to you. So anyway, again, inside day, there is a gap to be filled, 44.47, 44.67 from over the weekend. We have that prior weekend going back to August 25th gap, 44.06, 44.15, for very obvious reasons, only until we get below the gap from the weekend should we even be concerned about anything lower in the short term. So that is what we've got for that. Over on the spreads, you had to flip it out. But $3 credit down to $1 on the 44.85, 44.80s, 100%, $2 on your $2 risk. The overnight 44.50, 44.45 puts, 75% over there because, again, we were going to be closing green. We did not threaten either edge, top or bottom, and we never seriously threatened any kind of plus or minus 1% level because yesterday was boring. Hit your top right at the open, hit your bottom right there at the EU close, and just floated along up until you got to that 130 and then went absolutely nowhere. We'll get back to this in a minute because we're going to go over a couple of charts. Here's your VIX. And again, volatility being compressed. Your volatility being compressed should be a lot lower than 14. And right now we are still holding that 14 level over there on the VIX. We do have a gap that needs to be filled from overnight. We filled the gap over the weekend yesterday as we came that cruise down low into the middle of the day. But again, this is your warning level. Your warning level is 1451. And when that 1451 starts to be breached, not touched, but breached, that's when there is some serious concern as to how they are overinflating what's happening on the NASDAQ weight stocks, which is what is supporting the market at the moment. Bring you on to that. Here's your QQQ coming off that bottom. Actually, it doesn't have the bottom here because I don't have the time frame correctly. This is 15 days. But anyway, you see, you know what you got. Bam, bam, came back down, and here you are. You're moved back up, 381. Nice little trend line that we had, and here we are just breaking above it yesterday, floating over above, hanging that 375.10 at the moment. 375.10, very significant. To get a break below 375.10, you still have the 50-day moving average, which is down here at 372.50. And just for display purposes for you, to show you, yesterday you had a 3-point gap up, and then we still, again, traded less than 4-point range, and we only closed 1.3 points above the open over on the QQQ, having actually made it to plus 1%. So, again, a very, very boring kind of situation and scenario, and a big highlight here because QQQ closed once again, hollering and screaming, warning, 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 plus 40% year to date. So the September dip 374.67 is the primary viewpoint as to are we getting a dip? And again, back onto the charts, that 375.10 is your 50 retracement of this recent dip. So it is obviously in focus. Is this a 1, 2, and a big 3 to the downside is coming? We don't know. So we will play this as the forecast is, which is at the moment. Let me drag this over for you. Completely repaired. Come on, baby. As we brought the SPX and the NDX up into overbought warning levels. Dow Jones, not very much because there's not much going on over there. And the Russell, which I'll bring you to in a second, is the canary in the coal mine, together with your Bitcoin and your Ethereum that's over there talking to everybody and saying, hey guys, you better be careful. Here's your Russell 2000, your IWM. Here's your June lows, which is equivalent to around 42.65, 42.80 over there on the SPX. Here's your lows over here recently, over in August. And as you can see here, it is slowly decaying down to that 182, 181. And anything that should happen to pierce through that would be a major, major warning for everything out there. So I could type it in or I could drag and drop it, but let's just type it in. Why not? Today is the Apple event. And this is your 90-day view coming off of May, coming off that big earnings gap view of Apple and where Apple is at the moment, below every one of its primary moving averages. So here is your Apple event circled in 2022 and your obvious move afterwards. Here is your Apple event in 2021 and your obvious move afterwards. Here is your Apple event in 2020 and your obvious move afterwards. Here is your Apple event in 2019 and your retracement move afterwards. You got to remember now, 2019, very, very bullish. 2020, this is September. We had our major COVID run up into the start of September, and then we had our first correction during September. 2021, again, continuation, moving up, and once again having topped right in September, and then having our correction into October before we double bottomed in October, more or less, on the indexes and made the final run up to the top in 2022. 2022 September, just prior to this, or right around this time, yeah, right over here, yeah, somewhere there, is when CPI missed, and we had the big move down on the SPX down to the October lows. Understand, Apple did not bottom until January of this year. This wasn't the bottom here in October, wound up going lower. And then you've got your 2018, which, again, to put it into perspective, 2018, we topped on the market at the end of September. October 3 was kind of where we went and did our double top. And then all of October was nothing but a sell down. November, a little bounce. And December, a much further sell down lower. So that's your Apple event. And your Apple event is going to be happening this afternoon. And here is where your Apple is. And again, zooming in from a much closer point of view, almost filling your earnings gap over here last week. And then suddenly the news came out that China is banning iPhones within government agencies. Once again, for those of you who do not know, when they mentioned that it also is going to be state-run government agencies and government-owned corporations. China is communist. The Chinese government owns a portion or has a member on their board of directors of that company of every significant, whether it's Alibaba that everybody knows about, Neo that everybody knows about, or any company that you want to pick that's over there in China, the Communist Party is involved in that company, no matter what. Bam, bam, here's your move. You can see a very clean bear flag. I would be looking at 180, 180.75 as being a top. And then the Apple event is today in the afternoon, typically when Tim Cook starts to speak. Ba-boom, ba-bam, shawam. And we go into the end of the week. Tesla, smoking crack. A sell side analyst, I shared this with DB, with Darren, a sell side analyst who was short the entire time that Tesla was going up, comes out and puts out a buy recommendation, and he is a sell side analyst over at Merrill Lynch, been totally wrong about Tesla for more than 3 years, comes out and says, you know what, I'm changing it from a 250 price target. I'm saying it can go to 400. You got your big gap up over the weekend and right over to our trend line. And the trend line, again, just to bring it into perspective, is this big trend line. This big trend line going down here, which, again, we did break for a couple of days back there in July. And you come out into a bigger, wider view, and you can see where that trend line come from and how significant that trend line is. And why not, dude? Let's do it for shits and giggles. Come on, bring on your studies, load big charts. Boom. And this is where we are looking at from a daily point of view. As you can see, a crystal clear running sell divergence. And we'll bring it over onto our 4 hour, and your 4 hour is overbought. Sell divergence, boom, makes no difference, but yes, overbought. That's where we are on the 4 hour. From a 1 hour point of view, this is where it gets kind of interesting, is as price continued to move upward after the opening bell or prior to the opening bell, you just had a running sell divergence that was taking place all day long yesterday. Bring it here, zoom it in so you can see it a little bit wider. Bam, 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 bam. So, yeah, if you want to drink the Tesla Kool-Aid and believe that it has some more upside to go, feel free. I hope it works for you, but very obviously, 258.94 is your primary move to the downside. Your gap that fills goes to 248.50 from over the weekend. Let it be, let it be, let it be, let it be. We'll take this off from the studies, remove all studies, and take us over to Amazon, which was the other crack smoker yesterday. No idea what got into Amazon. I really don't. I don't have an answer for you. I didn't read the news. We will look at live news. Live news yesterday. Nothing. Consumer confidence wavers. The Tesla 25 years of game. There's nothing out here. Okay, nothing. But Tesla had a major move yesterday because when you're selling Nvidia down and you are selling AMD down, you're going to have to find some other monkey on the tree that you're going to be able to feed bananas to. And that's what they did with Amazon. And Amazon actually filled one of its gaps. This gap here goes back to August 17th. Let me pull this out. Where are we? No, not really. Here's your double top going back to the beginning of August. So, oh, yeah, this is August of 2022. I apologize. August of 2022, there is a tiny little gap that is right here, which is here's your big top over here in April. Here's your top in August. Here's your top over here in July. And here we are. And if you do believe that you can get a run up on Amazon through 143, I hope it works for you. 135 is your big base down there. So last but not least, which had a little bit of attraction yesterday, is Microsoft. Microsoft, their big move down last week on the 24th, or 2 weeks ago when we had that big sell down day, and you've just been on this steady, call it a bear flag climb to the upside. Right above the 2022 open, right over here at 338. Wider view. Let's go on a much wider view. And yeah, this is where you're at. So as you can see here, when we're talking about the June lows, we completely took out the June lows over here earlier on the dip, this big drop down. And now we have ourselves what you could visually just look at as a ABC to where we're at. And you know what? Let's play around with this since we're here, because why not? Drawings, and you tell me if you see this, because I see this. Do I see this? Yes, I see this. I see this. Now, you tell me if you see that, because I see that. I don't know if anyone else sees that, but I see that. So there is your Microsoft, and call it what you want, but we have CPI coming tomorrow. Tomorrow at the opening bell, prior to the opening bell, is CPI. And CPI, as I've shared before, can do many different things. And CPI has already been going back August, July, June, and May, we were meeting or beating, and we were having fractionally green closes above the prior closes and a little bit red below the open. Very compressed range over these last two, June and July. June, if you remember, with quad OPEX, green, 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 green. Very, very odd, this move that we had here in quad OPEX in June, because that quad OPEX move that we had in June, bringing you back to here, was where we went 1, 2, 3, 4, 5, 6 green closes in a row. Longest record we had since November, going back to last year, or 2021. So with our close yesterday, up 29.97, you got 2 green closes. 3 green closes is very rare. It's not impossible. 4 green closes gets very rare. You've just had 4 green closes going back prior. 1, 2, 3, 4. So it's not impossible, but it's not the greatest thing in the world. Because again, it's quad witching OPEX. We are playing around with a number of different algorithms that are in charge right now. And last but not least, to leave you here, your futures with the big gap ups that they had on the contract rollover. Yeah, you're not looking really pretty at the moment. But for now, you're still alive, and it is still possible. I wouldn't say plausible, but possible. So crude oil making a run up. The dollar is rebounding. The yen got oversold. Very big day over there in the UK, and we will see how everything goes after we get to the open. Have a great morning. Have a great afternoon. Have a great evening, and eat some tacos because it is Tuesday.